to pause for any reason, that's totally cool. If you need to go to the bathroom, the last podcast recording I did, the audio and video cut out, and I had to log back in. So if anything like that
Wow.
happens today to you or me, we're good. So
Great. This is excellent.
cool. All right, cool. Welcome to the Operator's Playbook. This show is about how real estate actually gets run: leasing, operations, capital allocations, and increasingly systems. The industry is in a strange moment right now. Most firms are optimistic, deals are coming back, but growth isn't happening at the pace people expected. The labor market today is in a low hire, low fire situation. The macroeconomic pressures of higher gas prices, which lead to higher inflation, makes it easy for business leaders to say maybe later to opportunities. On top of that, firms are still figuring out what AI means for their business. So, is this actually a talent problem, or is there something deeper around systems, leadership, and execution that we should be focusing on? Today's guest is Dr. Chip Roper, managing partner at RKE Partners. He works with commercial real estate firms on leadership development, sales performance, and building teams that can actually scale with a business. Chip, it's great to have you on.
Clinton, it's great to be here.
So before we get into the report that you put out, Chip puts out a quarterly report that is fantastic, that is required reading for anybody running a real estate firm that employs people. So before we get into that report, can you just give us a quick background about yourself? How and why did you end up focusing on talent and performance inside commercial real estate firms?
Yeah, it's great. It's again great to be here. Thanks for having me, Clinton.
Absolutely.
I actually started my career in construction. I had an electrical contracting firm, and we did residential and commercial work. So we got exposed to the commercial side of real estate there. Did some development along the way in a prior life, and as we built this team at RKE Partners, we've got a couple of amazing commercial real estate executives who are now doing coaching and advising. So we've got David Ridley, who founded Invesco Real Estate's business, and we've got Kay Cotter, who was a president at Staubach, and Staubach was a tenant rep business that was purchased by JLL. So we just had we had a bench in the space, and it's also, back to, it sort of gets to your opening question: is it the talent or is it the system? Yes, it's both, and
Yep.
we think firms that invest in their talent are gonna be able to over the long haul. They're going to be able to outperform those who don't. And
Sure.
David really proved that at Invesco. They had a 3-pillar model that we still use today that they scaled their whole business on, and the first pillar is the individual leader. They need to be confident and humble. They can't be a jerk, and they can't be unsure. You can make some money in the short term as a jerk, but it's really hard
Right.
to attract and keep the best people if you're not a good person yourself. So pillar one's the individual leader. Pillar two is a team. You talked about all this disruption that we're facing. It's like there's a black swan every time we turn around. And if you have a good team, you can get the best ideas on the table. Even when the world is kind of spinning out of control, and it's
Yeah.
not dependent on one person just to stay ahead.
The
And then
the black swan
the third
happens to
pillar
everybody at the
is
same time, right?
delivering differentiated value for your clients. So
Okay, so was there? So why did you specifically choose commercial real estate to focus on? Like, what drove you to want to work with talent and training and people and systems? Was there a moment, a light bulb moment, where you realized these firms maybe weren't constrained by talent, but maybe by execution? Why are you doing what you do?
yeah, like we find that, and I don't know what the right percentage is. I hope it's higher than maybe even my estimate, but 40 to 50% of firms are thinking about are really they really are strategically thinking about talent and how do we make the best investment in our people, our human assets as we work with real assets. And but there's not really a vendor that is owning the market. So that's an opportunity. And then there's the other half of the market that just thinks if you just throw people in and see if they could swim, you'll be fine. And we think over time they're going to lose the war for talent. They're not going to be able to attract the best people. They're not going to get the best contributions from their people. So there's kind of opportunities on both sides of that.
Right.
The people that are already using firms like ours and the companies that are not.
And the homegrown training and system, and people that are doing it themselves, I guess. But so let's dive in to your most recent report, which you put out earlier this year. The survey was done in Q4 of 2025, so the information is a little bit older. But we're looking. This was the outlook looking forward to Q1 of 2026, and I think the most interesting fact that I saw in the report, it said 82% of executives expect growth in the first quarter, but 53% aren't expanding. So, can you talk a little bit about that gap? Why do you think it exists, and what are your clients doing to solve it, and how are you helping them?
Yeah. So the report is the market sentiment and talent report. We produce it every quarter. We get input. We source it from top executives at all the top firms and a number of mid-level firms and some small ones too. So we get a nice snapshot of what leaders in the industry are seeing. And I think there's still a bit of this. Part of that gap is between can we get some short-term gains without having to make a bigger investment. And I think there's a whole major portions of the industry that are very producer driven. So they're sales organizations, and it's very top line oriented. And our thesis is you can do that for sprints, but it's harder to sustain that over the long haul. And so I think that's one. So there could be a mindset issue there where people are like, well, if I can do better without having to spend more, I'm going to do that. And of course, we all do. We're all business people. We understand that. And then I think another piece of that is probably just it's a mindset of, for those who are more like they're more senior, boomer executives. Well, nobody did that for me,
Right.
so I don't need to do that for the people coming up. And the rules have changed. There's other things creating pause on any kind of discretionary spend, things that you mentioned in your intro. So, and especially now we're already almost to the end of Q1. I think as we're recording this conversation, with everything that's going on with first oil's up because of the war, and we don't, the war's going to end one day and the war's going to go on forever the next day. And that kind of
It's
variability.
It's easy to be unsure.
People are pausing. Yeah, exactly. Why should I? I'm not going to spend money that I don't have to spend.
Yeah. Yeah, and if I'll say from my own perspective, now is kind of the best time when things are slowing down, when things are more unsure. I personally think it's a good time to invest in your systems, go back to the drawing board, maybe get some more training, more education. That's why graduate education always goes up during recessions. So I think salespeople, real estate people have to have that same mindset. But you found also, just referencing the report, you found a negative correlation that we were just kind of talking about between growth and perceived talent quality which I think is counterintuitive. You'd expect growing firms to be the strongest with talent, but your data kind of says the opposite. And we were just talking about rainmakers maybe leading the way. So what does this growth paradox that you talk about actually look like inside a firm? And you could talk about brokerage and property management and maybe a vertically integrated owner. They might be different, so we could break those out. But where does the growth start to kind of break normal systems and talent and bringing those up? So you could talk about brokerage, property management, ownership, whatever you're seeing right now.
Could you actually? You were kind of coming in and out.
Oh, really? Okay. Sorry about that.
Yeah, I missed some of that.
Let me
question.
let me repeat it. Let me repeat it. So we'll go back to the growth paradox that you talked about in your report. So you found a negative correlation between growth and perceived talent quality, which is kind of counterintuitive. You'd expect growing firms to have the strongest talent, but your data kind of says the opposite. And we talked about the rainmaker idea of real estate, where there's one person driving growth. So what are you seeing with your clients? How are they actually bringing up talent in their own firms? And you could talk about brokerage or property management or a vertically integrated owner. What do they need to do to bring people up? And where does growth kind of start to break things?
Yeah, so there's three ways to acquire talent. One is to raise it up internally. Two is to hire it individually, and the third is to acquire it and to purchase other firms. And we see elements of all three of those going, across the board. I think that growing firms are finding that it's the paradox piece that you mentioned, is that they pretty quickly they exceed their talent capacity. They get to the point where yes, we've generated a lot of top line revenue, but we don't actually have the executive presence skills or the bench of executives to maintain healthy client relationships, say, going forward. Or our property management business actually can't keep up with our brokerage business, because we want to, once we start getting engagements in our tenant rep side, we actually need to hand those over to our management side to keep everybody happy for the long term. And a lot of the most motivated talent seems to be attracted to the brokerage side, and and so it's hard to find a company that's been able to really unlock the secrets of property management, which is a key driver of long-term value and that kind of thing. So I know we may talk more about that, but
yes,
it's just one of those gaps that you kind of see over the course of business, that the things that can drive the top line and celebrating the big numbers, quickly there needs to be, it's almost like in the military, you're talking about the Marines take territory and the Army holds territory. I don't know if you've heard that analogy, but
yeah, I haven't. Interesting.
But it's like there's lots of Marines, but there's not enough Army. There's lots of take the territory, but not hold territory. And holding territory is not as sexy, and the bonus structure isn't the same. So there's some unlocking that needs to happen on that side of the business.
So I think we can jump to property management since you brought it up, which I think is a conversation that we've had offline before. But you kind of described property management as an isolated ecosystem, and that performance there doesn't really correlate with brokerage success. I say this all the time when I'm pitching my own firm, which I think is obvious. You don't want a property manager selling your apartments or leasing your space because they aren't salespeople. But property management is super effective at client retention. And that's where, the retention is where long-term value is. That's what, that's what keeps people paying rent. So, why do you think the industry has failed to integrate property management into the core business? Or what can you do as a coach to kind of elevate property managers and maybe make them salespeople, or kind of bring some of that, those sales skills, those soft skills, those relationship building skills, into the forefront and help them sell?
Yeah, so property management is really a fascinating slice of the pie. I think so first of all, it is sort of the neglected, it's the neglected child,
Right.
in a vertically integrated firm. It's
Sure.
And probably the reason is because founders they never come up from project management, property management. Founders always come up as brokers.
Yeah.
They're deal people,
Acquisitions,
and
doing deals.
so
Yep.
they don't understand property management that well. They know it's kind of important intellectually, but they don't get it. And founders notoriously think everybody should be like them. So even though they know everybody isn't like them, so that's a whole, the whole psychology of a founder thing. So
Yeah.
I think that's probably that's part of it. And the other thing you could argue is that some firms are just not. They're not going to be able to do both, and they'd be better outsourcing to a more qualified property manager who's going to, keep the lights on, keep the maintenance up, retain leases, turn to all that. It's worth getting the experts on it. And so there could be an issue of scope where, if you're really good at one slice of this, you don't need to necessarily do all of it. And
Yeah.
I think
Good to-
Bezos is famous for saying, whatever makes your, just do the one thing that makes your beer special and let everybody else do the rest, kind of idea. And so it's about focus
Yeah.
on your differentiators.
The,
What we
the,
find is that, go ahead.
the specific crowds out the general. Yeah.
Yeah.
That's
right.
how you make money.
Exactly. And so there could be some, we have some firms and some connections who they've made a choice. They're not going to try and have a property management division. They're just going to outsource it to a vendor they can trust. But the other piece of this is that if you do have a property management business, you need to invest in the managers in that business, because all the data from Gallup and others shows that the level of engagement from employees is determined by their manager. And so it doesn't take that much, actually, in terms of spend to invest in the leadership skills and confidence of a manager. And we have one of the things that we do and deliver for the industry, or we call them leadership academies. They're 6 to 9 months. Everybody gets feedback. Everybody learns who they are and their unique skills and strengths that they bring to their management tasks. They also learn the liabilities they bring to their managerial task, and they grow in confidence. And most of them will get better quickly, and a few of them need to be volunteered to get better somewhere else, right? Like that's just always the way it is when you start to invest in your workforce. Some of them can move up to the next level, or most of them actually can, and a few need to move on. And so we find that that's really the sort of they're the tip of the spear in terms of the experience on a site, and it's really critical. It doesn't take a huge investment in them, but it can make an outsized impact on the wider business. When you were talking about retention, you may have been thinking through like tenant retention or lease,
Yes.
renter retention.
That's
Which is
all
a
I
big
care
part
about.
of the business, but that's all you care about. But
No,
employee
yeah.
retention is a predictor of those things. And you and I both live in New York City, and we live in a building that's managed by TFC or TF Cornerstone,
Sure.
and it is managed super well. And we've been here for a long time, and a lot of the staff we've been here for over a decade in the same building. Many of the staff have been there the whole time. Our leasing rep who talks to us every year for our renewal, same person. like it really makes a difference. And when it costs money to have to replace people all the time. And so by making an investment in them, people want to be able to grow. They want to be able to develop. You're cutting your costs, usually 1.3 to 1.7 times their salary. That's how much it costs to replace them. I can tell you it's much more economical to train them with a company like ours than it is to replace them. And it leads to people sticking around and being happy and continuing to pay their rent. So there's a lot of low-hanging fruit, I think, in the property management side of the business.
Yeah, I personally think, like what you were saying, there's there's acquisitions and sales that that founders often focus on, especially in a an ownership entity, but property managers and let's say one or two asset managers, those are the people that are executing your business plan. Those are the people that are going to make you money eventually. So it's fun to fly around the country and talk to brokers and tour buildings and buy buildings, but let's focus more on that labor mid-level bottleneck that you've been focusing on and that you just highlighted. So in your report and what you've been talking about, people with 5 to 10 years of experience should be leading, and I think we could talk about property managers here, but we could also talk about analysts at brokerages. We could talk about analysts or acquisitions or property management or asset managers at vertically integrated owners. So these people who are mid-level, who should be leading but aren't. So you train these people. So when you go into an organization, when you interview people, when you find a great, let's say, mid-level operator, what are they actually doing different? What are they doing on a random Tuesday that others aren't? What are the qualities that you sit down with somebody, talking with them for 15 minutes, and you say, this guy's going places with a little bit of training?
Yeah. I mean, I thought two firms, they're mid-sized firms. There's Granite Properties in Dallas and Foundry Commercial that's headquartered in Orlando. And both of them have dedicated leadership development plans. They've got experiences for especially that 5 to 10 year team member that has the potential to move up and do more. Or maybe they're a manager they've hired from outside who has the skills on the resume but doesn't necessarily, you don't really know how well they align with their culture. So they have an intentional plan. They dedicate staff hours to this. They make it fun. They make it good. And they make it a privilege. This isn't getting sent to the principal's office. This is
Right.
This is the company investing in you because we believe in you. And again, they create a stickier culture. People want to stay there. They get more buy-in. They get more productivity out of people. So they're intentional about it. And back to your sort of bigger, like your macro question, is it talent per se or is it the system? And the firms that don't have any systemic approach to executive development are the ones I think that are struggling. And they often will have a loose mentoring program. And some have really optimized that, and it's intentional and it's strategic and it's good. But many, it's just kind of like, welcome to the firm, Clinton. Find a mentor.
I've been there. I've been
Pat
at both
you on the back,
places.
and we'll look at your numbers, and that's sort of the end of it. And I think some other things that we've seen in the industry as a whole is that the industry has some steep competitors for young talent, in particular in busy hubs like Dallas and here in New York. Tech and finance are vying for the same kinds of people, and so it's the firms that offer the perks, the firms that are going to invest in you, the firms that are going to help you on a career path are the ones that are going to attract the best people. And I think so that could be another reason why we're not. That's another reason why there could be a little bit of a a gap there from that, not seeing that 5 to 10 year tenured person move ahead. And then a third reason, so we got, the intentional ones do well, the unintentional ones, it's hit or miss. There's this, are we attracting the best talent? But a third thing on this question, I think, is there also could be like older people just hogging the seats, so to speak, and I think some of our younger clients and friends are saying, hey, when's it our turn? And it's just it's a real, again, unless you have an intentional talent strategy that includes pathways for advancement, ambitious people are going to move on.
Makes sense. So how do you keep and retain, in your experience, talent? Is it you mentioned training and mentorship. How do you design a system like that? Did the firms that you mentioned, did they hire you to design this training and mentorship program, or are you modeling your own processes after them, or what? I'm just curious why you mentioned those specifically.
So with them, we realized that they were actually, so sometimes we have been brought into firms to do sort of the mid-level transition,
right?
We call it, and we're having other conversations with them about some other strategic places where we can add value and help them build the leaders they need for the future. We were noted that, they're doing this, and so these two firms are doing this and others are not. So it's kind of interesting to us to look at, there is a need here, there's a market here, and it's kind of it seems like it's validating. And when we look at their turnover and their growth, they're doing really well, and we think there's a correlation there. We've worked, the solutions that we've developed and delivered, they do go back to that original Invesco model of training. They also bake in, it's kind of a boot camp structure, so there's a combination of in-person and virtual conceptual learning and coaching, testimonials and fireside chats with key players from your firm, so that it's really organic in terms of the expertise that we have as professional trainers that we've developed over our careers, and research that's a big part of it too. And by research I mean like organic collection of data that's relevant. So performance data for each participant, 360 feedback. We ask the participants what they think they need to learn. So there's lots of ways that we pull in qualitative data to keep everything we do anchored in the on-the-ground reality and culture of a firm. And one of the things that companies tell us that we love to hear is, your training, RKE, actually felt like it was our training. It didn't feel like, an invasive species, the nerds from New York telling us what to do. It felt like it was really ours. It was us. And we have a proprietary listening process of tailoring what we do so that it matches the culture and language of our clients.
So it's really not like firms say, we don't have the talent to grow. You say you don't lack any talent. You're not lacking of talent. You're lacking of a structure, of a process, of maybe visibility. So the people that are, those 53% of firms that, let's say, aren't growing, are they misdiagnosing their talent problem as a system problem? Or is it vice versa? Do they need to set clear KPIs and expectations and the feedback loops that you mentioned with the fireside chats and mentorship? Can anybody take talent that's existing in their organization and level them up? I feel like you're going to say yes because you're the coach, but is that accurate? Are we talking about talent versus systems?
I'm still having a little trouble with your internet. Seems really laggy.
Oh, really?
Can you? I got about 20% of that
Oh
statement.
no. Let me can you hear me okay now? Just
I can hear you now. Well, now you just dropped out. It's
give me one second. I'll be back in 1 second.
okay.
All right. Let's try it again. Can you hear me okay? Chip, you there? Can you hear me?
Yeah, I can. Can you
All
hear me?
right. I can. I can. Let me let me see if I can never mind. Okay. All right, let's try again. So
Yeah,
you
sounds
were
clear
talking.
now.
Okay, all right, that's good. So you were talking about the firms that you work with, the firms that you interview. They might tell you we don't have the talent to grow, but how much of that is actually the lack of talent or the lack of structure and process and visibility? Do you think you could walk into a company, sit down and interview everybody and say your talent problem is actually a system problem?
Yeah, I mean, I think in some sense it always is a systems problem. One of the leadership gurus I like says, your system is designed to produce the results you're getting. Like, so if you are not attracting top talent, that's because of the system. Um, and I think that's normal. I mean, the other caveat to put in there is that any growing firm, like there's going to be people that get you from point A to point B that aren't going to be able to get you from B to C, and some of them are just great people that just as you grow and as you become more professional or more specialized in different departments, that there's just not a seat for them anymore, and most of the executives I work with find that conversation really difficult. They don't relish
Sure.
that conversation, but they still have it. So, but ultimately, yeah, I think there's a sense that it's a systems problem. Like, if yeah, one of the stats we shared was that only 35% of the firms we surveyed had a formal performance management system. In other words, like a set list of criteria and timing for an annual review. Some of the people we've talked to at the VP level feel like, it's really not in any ways. We don't have an objective evaluation of our team members, and it's more who's in favor and who's not,
Mm.
usually with a founder. And so that's not motivating to people who are, they want some objectivity, they want fairness.
Yep.
And so that's a system. That's a lack of a system. But even the lack of a system is actually a system. I think, you probably agree. So we all have a system, whether we call it a system or not. It's a system. It's a way we do things habitually. It's a way all the pieces fit together. And so I would say it's probably more of it actually ultimately almost always comes back to a system. Like when you look at a founder-led business, one of the things we often have to do to help that business prepare for succession is democratize decision making a bit. We want to help that founder identify, first of all, some of the kinds of critical market facing and internally facing decisions that they make, and then include some others, at least in debating, the best strategy moving forward. Because if they don't do that, then everything literally seems to happen in this secretive, smoke-filled room kind of space where nobody's prepared to know how you've made this business successful, and it can't outlive you. It's dependent on you. So all that stuff those things are really ultimately systemic. And one of the things that David loves to talk about, Dave Ridley, is the difference between a team system and a star system. And And he really tried to build and did build Invesco Real Estate as a team. Like, we're going to win and lose as a team, and that affects how you design your compensation. It's all these other things. It really goes, and that's part of the system.
So you touched on the founder, the one person, the rainmaker. A big part of your work is sales discipline and training and pipeline structure, leveling up. We were talking about before, the analyst from an analyst, maybe year 3 or 5, to a director. And most commercial real estate firms, no matter the discipline, they still rely on individual rainmakers, right? So what is for maybe the newer people, or the 3 to the 5 year, maybe even to the 10-year level, what does a structured, repeatable business development system actually look like inside one of these firms, taking the rainmaker out of it?
I lost the back half of that again.
Oh, I'm sorry. So, all right, we'll try again. Can you hear me?
I can hear you.
All
Yep.
right. So what is a structured, repeatable business development system actually look like inside of a firm that you might try and train?
Yeah, it's a great question, and it's not really rocket science, uh, but it's like time to go to the gym and work out. It's not like a magic formula. It's so much as it's getting into the right kind of habits. And when we do a broker training, a sales training, first of all, we understand the specific asset class that this team or individuals are working in, and what's their sales cycle like, and what are the opportunities, what's it look like, because there's a difference. There's a difference between, say, a capital markets group and a tenant rep group. There's a difference between a capital raising group that's working on filling a slate of LPs and versus a firm that's selling development services, for instance, or something like that. There's some nuances and there's some differences, and they use different terms. And yet, to us, in some ways, there's the same kind of process involved. First of all, we'll bring people into a group setting with their peers, with some role models from their firm, and we'll ask them to describe their value proposition, like what are they offering and why is it different, and their first pass is always terrible. It just is. Like, it just sounds like AI slop from their website. It's not clear. It's not compelling. It doesn't feel authentic. And we just kind of put them on the spot, and they haven't practiced. They haven't thought through what's the best way to describe who we are, why we're unique, why people should do business with us. And then we work them through a process of, it's kind of a combination of things. Like, you got to work on your message, your messaging, and in every asset class, the pitches are different. Some are just in person over a table, some are decks and more formal. So there's that kind of side of it. But then the other piece of it is how do you fill a pipeline, and really getting your prospects organized, and then going after them in a disciplined manner. And this is really pretty much usually as simple as a spreadsheet, and keeping your prospects in groups. And many younger and junior folks, like, they were brought in on deals when they were analysts, and so they already have some connections and some contacts. Many of them also have other contacts they're not talking to that they could talk to. And so if you don't have any contacts, if you don't have any real prospects for the particular solution, real estate solution you provide, then you talk to people who would know people who need the solution you provide, and you have to start to build a prospect list. And some of the work we've done for companies like JLL, they know when deals they financed, like when the financing is going to expire and need to renew. Like they have a whole in-house. There's a lot of in-house data, and especially in larger firms, that you can use to identify opportunities. So there's a hustling, and there's a going and gathering prospects, and then reaching out to those prospects on a regular basis to try and get in front of them and find out what they need and share what you offer. So it's a combination of desk work and people work, and all of it needs to be habitualized. And so what we typically will do is we call it a 90-day accelerator. It's amazing what kind of good habits you can build in just 90 days. And it's a combination of conceptual training, being exposed to internal role models in the company, and then we meet with those trainees every week. They get a short coaching session every week to build the habits of identifying ideal client prospects, reaching out to those prospects, and moving those conversations from the introductory level to close. And, in many elements of the commercial real estate world, the sales cycle is long. And so you need a large cadre of warm relationships, and you need to maintain them over often like 24 months or more. Like this is not like, some of the old life insurance types talk about dialing for dollars, and some of the penny stocks sellers here in New York. Like that's not what you're doing. You're not
Right.
dialing for dollars. You're cultivating relationships with people who are going to understand that you've got integrity and you're trustworthy, and you're interested in them and their business, and you have interesting things to say about the solutions you offer.
100%. I came up in at Marcus and Millichap before going through a more of an individualized, let's say, rainmaker, which we're gonna stay on that topic, but calls, meetings, proposals, and then you need to follow up with those prospects that you've met. Hopefully, you're meeting 50 new people and doing 50 new proposals every year, which is one a week, basically. And then following up with good information. It's not rocket science, like you said. You just put some time on your calendar, make those business development calls, or send those cold emails, or post on social media now, and get some market awareness. So let's shift to something that you said earlier, which is that most commercial real estate firms are still personality-driven, rainmaker-driven. The business usually runs through a founder or maybe a few partners or a few key producers. And one thing that we haven't talked about, which I think is super interesting that you do, is succession planning. So how do let's start this at this point. What point does a founder, or what point does founder dependency become a liability?
It can really happen at a number of key intersections or plateaus along the way. So, you could have a founder that generates so much business that the firm doesn't have the infrastructure to execute that business. So contracts aren't being completed. We talked about maybe there's after you get somebody as you're gonna get them as a leasee or something. You still have to manage the property. They may not have the ability to follow up on all the next pieces, and so that could happen pretty early, I think, in a firm's development and evolution. I think another place comes from, so you have the infrastructure, but as the market goes up and down, and it does in a maddening cycle, you don't always have enough business to keep all your execution side busy. And so then, you kind of, the capacity of the business doesn't match the capacity of that founder to make rain. He needs some other junior rainmakers, or it's just not going to work. So that it can happen in this is the thing. It's moving up it's it's going up and to the right kind of thing, but it's up along the way. I think so. Those are early stage pain points or pinch points where there's too much founder dependency. I think along the way, eventually founders want to exit, and
Sure.
some of that, or they start thinking about exiting, and that's when this gets real for them. And they often have even though they're going to exit, they still have they still have ownership, sometimes a majority stake in the business. So they start to realize, oh no, this is too dependent on me because I want to keep making money, but also not have to make it all work anymore.
Right.
And there's nothing wrong with that desire. We all invest in assets that make us money. I mean, that's what investing is. So
that's the idea.
That's not like a delusional desire. That's a great desire, but that's where it really starts to come home because, if they don't have a diverse team on the production side that's bringing in new business, and they don't have the management capacity to make sure they're delivering on their promises, managing their portfolio, then they realize like this is so dependent on me. That I'm never going to be able to get out of it, and so that's where it becomes a very, very personal thing, I think, for founders, and they realize we've got to move. And I think I said earlier, but that there's a shift usually that has to happen from founder. It's like we sometimes call it hub and spoke. They're the hub in the middle, and everything has to go through them. Nothing happens unless they're a part of it. And you've got to push that out a little bit, at least to another ring of decision makers and senior leaders that people are reporting into, so that it's not a bottleneck. That's preparation for a more deliberate succession plan, which usually doesn't need to come until closer to the time when they want to exit, but it's still you can prepare your culture for that.
Yeah, it's. I'll say that it's tougher in a active management business similar to brokerage or property management, a service-based business. You really, if you're trying to retire from that, you really have to have that training. Maybe not from day one, although it's a good idea, but as you're transitioning out, you need to bring people up that are still essentially going to pay you franchise fees, right? Owners of properties, I think it's easier to find a third-party manager or sell, but interesting to think about it. So let's shift to AI, and I want to talk about this from a rainmaker's perspective. And I guess first of all, where do you actually see AI impacting commercial real estate firms in a real way over the next few years, over the next few months? It feels like every time a new research report comes out that property management firms and brokerage firms and any third-party manager comes out. The crux of the article is usually Claude can do everything that these people are doing. So are they even going to exist? And it takes their stock down, 10 or 15%. So from what you're talking about, the systems, the training, where this is the hot topic, right? Where are you actually seeing AI as an impact in commercial real estate firms? How are people using it?
Mostly they're thinking about it and implementing it as an improvement to productivity.
Yep.
It's we say it's a force multiplier more than it's going to replace people, and it may replace some people, different functions, where it's all data crunching, or when you think about a sales enablement team, there's things you can do with AI to find ideal prospects and prepare your pitch, and that are probably going to replace a few people in a large firm that has a sales enablement or sales ops team. But if you're leasing a space, you still probably want to talk to a human being. If you are a leasee or a renter, and there's something wrong, you still probably want to talk to a human being, depending on what it is, depending on the speed. It could probably be hybrid.
Yep.
So I just think that we're probably going into more of a hybrid world. In fact, some of the training that I had at Columbia, they rolled out a post program AI symposium, and they talked about hybrid intelligence, not artificial intelligence, not human intelligence, but hybrid intelligence. And I think that's right. That's the term. Like, that's what it's going to be. And there's going to be places where it slots in really, really helpful ways. And then there's going to be other areas where this is a people business. And
100%.
And it's a physical business, and we're talking about physical assets. And I want to see it, and I want to walk it, and I don't think I actually want a robot to show me around that building. I think I want a person who knows who knows what they're talking about. I think another, probably less tolerance for a lack of information, a lack of facts in the people we're dealing with, because you can get all the facts now really quickly. There's really no excuse for not knowing, with all the agents out there and the ability to get. It's really great for research, and so I think, hybrid intelligence, that's the future, and it's going to improve some processes. It's going to improve data, and I don't know, Clinton. I have a theory that that with the rise of AI, with the rise of so many things that are virtual and digital, that people who are skilled at the human are going to do really, really well, because we're going to crave in-person experiences that are great. And so if you're a great broker, you're a great property manager, you give people a great in-person experience, they're already craving it because they're tired of being on their screens all the time, even though they don't know it. And it's an opportunity for differentiation.
Yeah, I agree with that. I think, like you said, and I'll echo it, this is a relationship business, and this is a brick and mortar business, yes, but AI is really great at disseminating information quickly and accurately if you give it the right information, which it doesn't always have the right information, and it can get confused for sure. But I think you mentioned before, you might be able to operate with a lighter team. So, this is not really real estate related, but it's people related, which is your industry. So new hires are already facing like a 20+% unemployment rate. And it kind of feels like the ladder is being pulled up behind our generation or my generation. Mm-hmm. So, what's your message to the rainmaker about hiring, low-level entry level, or maybe 2 years of experience right out of college? What's the right balance between AI versus, it's really good at data entry, versus an analyst who, it might take 2 years for them to level up and actually get past that. So what's the right balance? How do you recommend people hire for this new world?
Yeah, that's a real tough. In some ways, it's a tough question because we're really talking about your bottom line in the short term.
Yeah.
And if my bot wrangler can do the work of 6 analysts, for the price of 2 or 1.5, it's, from the economics, it's kind of hard to not do that. So I wonder. I think what's going to happen is that, first of all, it's really tough for those folks who are entering the job market right now. And they need to become AI wranglers as quickly as they can, especially if they can do it for a specific industry as opposed to generic. I think that's their play. And what's probably going to happen is in 4 or 5 years, there's going to be a bit of an oh shit moment, and people realize we just don't have the talent pool that we need, and we're going to have to go back and invest in on the job training and career development because we just can't get the talent we need. And I'd like to think that if I think there may be some forward-thinking companies that start to deploy some interesting internship experiences, and they may mitigate some of their risk by having them be low pay or some, but they're gonna see what people can do, and they're gonna take the ones that can be hybrid. Hybrid intelligence, not hybrid in office, out office.
Right.
But they're going to need to do it because they're not going to have the talent they need in 4 or 5 years. And the other thing that's coming, it's like right now where everybody's worried about the job market's frozen, as you said earlier, and people are worried about finding jobs. But if you fast forward the clock another 10 to 15 years, there's actually going to be a huge talent shortage. There's a lack of students entering college, like the generational cohorts are smaller.
Yep.
I think it's Generation Alpha, and the baby boomers are finally going to retire, and so it's there's going to be a shortage of talent, and they're going to be underdeveloped, and so we're going to industry is going to face a huge challenge in finding the people they need. So. Our thesis is that the companies that are forward thinking on developing people are going to be the ones that win in the long term, and we love being their partner to help them do that in high ROI, sticky ways that fit their culture.
I love it. So invest in young talent. That's the key, because they're less expensive.
And maybe
you can supercharge them with AI, and if you're not using AI yourself, hire a 23-year-old who you can level up together, right? And teach your own processes.
And you can be picky.
You can certainly be picky, yeah.
So you can pick really sharp young talent.
Yep. So Chip, I want to do a quick rapid fire here as we wrap up. Off the cuff, obviously take a minute or a moment or two to think before you answer if you want, but quick 5 questions before we wrap
Great.
up. So what's one thing that most commercial real estate firms get wrong about scaling?
They assume that the way they've grown in the past is going to be the way they're going to be able to grow in the future.
Love that.
And
what's
same sector, like we're just going to stay in the same sector. We're just going to have one more rainmaker. Like they need to think through like what assumptions need to be tested.
Very good. All right. What's one KPI every firm should be tracking but is not?
I'm actually not sure how many firms actually track employee retention.
Okay.
It's a real number. Large corporations do. There's some numbers on property management employee retention that are pretty poor on the industry wide, but I'm not sure. With broker retention is an issue too. So I just think retention is an important stat, and especially up and coming firms are not tracking it.
I think to echo what you said, if you tell people it's 1.7 times the cost of replacing somebody, they're gonna try and have less churn, right?
Yeah.
Okay. So what's overrated right now in commercial real estate?
It's overrated. I mean, AI might be overrated.
I was going to caveat that you can't answer AI.
I can't say AI.
No, you can. You can. You said it.
It's sort of like it's going to save the world and change everything and make us tons of money without any people, and then it doesn't do anything. Like it's we're schizophrenic about it. I think that's the one that gets a lot of noise.
For sure. It has to be overrated in some respects, of course.
In the industrial sector. I would say the industrial sector may be a bit overrated. I think there's been a lot of money pouring into industrial over the last 5 to 10 years, and some firms are they're only in 1 asset class, and if that's the one, you may have a lack of balance in your portfolio.
So, opposite question: what's underrated right now in commercial real estate?
At least we're hearing the availability of capital might be like there's a lot of capital to be invested.
Yep.
And firms that have a good track record have no trouble finding LPs for their development projects. That's not an issue.
And if you have good relationships, if it's we keep saying it's a relationship driven business, get a programmatic capital structure going, and just find deals. That's the whole thing. Mm-hmm. So, all right, last question. What's one behavior that you'd change across every team tomorrow if you could?
The seduction of wishful thinking.
Unpack that a little bit.
Yeah. Which is that, we hire you and we went through this rigorous process to interview you and everything, and then we succumb to wishful thinking that you're suddenly going to intuitively know everything we expect in terms of your deliverables and our culture, and we just hold our tongues for 6 months, hoping it's going to work out, and then we get into 6 months in, and it's either one or both of those things isn't happening. Either you really don't fit in our culture, or your performance isn't what we really hoped it would be, and then we either need to keep you, even though you're not a good fit, to save face, or we fire you after 6 months, and that tanks morale. So that's what happens when we get seduced by wishful thinking instead of clearly articulating our expectations early and often.
I have a feeling that you have some personal experience with that frustration, but we'll leave it there.
Every CEO does, brother. Every CEO does. Yeah.
Dr. Chip Roper leads RKE's line of services for the commercial real estate industry, including leadership development, succession planning, and talent strategy. Chip, I really appreciate you coming on. This was great.
Thanks, Clinton. Thanks for having me. All the best.
Absolutely. All right, we'll talk to you later. Let me